and welcome back. I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Sectoral Pulse by Kalkine TV, a special show covering all sectoral movements from the markets for the day. Australian shares are trading up today as energy stocks rose, tracking an uptick in oil prices. Their losses in gold and technology capped gains. The top percentage gainer on the benchmark index was Ansell, rising 5.1%. after projecting strong sales growth for the half year and the full year. The top percentage losers on the index was St Barbara with a 7.6% fall and JB Hi-Fi losing 3.9%. as both companies reported disappointing earnings for the quarter. Shares of Bingo Industries were the most traded by volume for the second day in a row. That's after they reported on Tuesday it would be bought by funds managed by Macquarie Group for $1.8 billion. The markets rallied sharply shortly before midday after the Australian Bureau of Statistics revealed lower than expected inflation for the March quarter. The S&P ASX 200 is trading up, gaining 25.70 points to 7,059.50. The top performing stocks in this index are Kogan.com and Downer EDI. Over the last 5 days, the index has gained 0.89% and it's currently 0.50% off its 52-week high. Among sectors, energy stocks rose 0.7%, tracking gains in oil prices. The Viva Energy Group led gains with a 3.8% rise, building on Tuesday's gains after it said it had expected a $15 million in government aid for a refinery in the first quarter. Financial stocks rose 0.74%, led by QBE Insurance Group. That was up 2.28%. They were followed by Virgin Money UK, gaining 2.03%. Technology stocks fell 0.6%, with Link Administration Holdings leading the losses with a 3.7% drop after a consortium including the Carlyle Group and Pacific Equity Partners withdrew their bid for the company. Miners also fell 1.23%, while gold stocks fell 2.28%. St Barbara was the top loser on both the indexes. Australian energy stocks climbed as much as 1.6% to post their biggest intraday percentage gain since April the 15th. Aussie subindex for energy stocks takes cues from oil prices. That edged higher on Tuesday as OPEC, Russia and their allies agreed to raise output slightly from May the 1st. Australia's energy subindex is on track to post its second consecutive session of gains. Oil Search climbed as much as 2.4%, posting their best day since April the 15th. Gas producers Woodside Petroleum and Santos also witnessed an upside. In other markets, Japan's Nikkei was down 0.11%, while the S&P 500 E-minis futures are trading up. In New Zealand, the benchmark S&P NZX 50 index rose 0.31% to 12,659.6. The top percentage losers on the index were Sky Network Television and Oceania Healthcare. Asian shares were mixed on Wednesday as already high valuations discouraged investors from buying equities ahead of a closely watched US Federal Reserve meeting. MSCI's broadest index of Asia-Pacific shares outside of Japan declined 0.23%. Shares in China slipped 0.44%, while stocks in Tokyo edged 0.16% higher. The Dow Jones Industrial Average rose 0.01%, but the S&P 500 lost 0.02%, and the Nasdaq Composite dropped 0.34% as investors digested a mixed bag of earnings from Tesla Inc., 3M, Microsoft Corp and Google parent Alphabet overnight. Some investors were also reluctant to move before earnings from heavyweights Apple Inc., Facebook and Amazon.com Inc., which are due later this week. An improving US economy, rising coronavirus vaccination rates and expectations for big fiscal spending are causing more investors to question whether the Fed will start slowing its bond purchases and by how much inflation policymakers will tolerate. Moving on to the currency market update now. The Australian dollar slipped on Wednesday after surprising soft inflation data argued for super loose policy for years to come. This was through surging commodity prices, and that helped limit the losses. The Aussie dollar fell 0.3%. The New Zealand dollar followed with a dip to 71 cents, having failed to sustain a 5-week top of 72 cents, which they touched on Monday. Australian consumer prices rose just 0.6% in the first quarter. Even more startling was a slowdown in a key trimmed mean measure of inflation to a record low of 1.1%. That was far away from the Reserve Bank of Australia's target band of 2 to 3%. The market reacted by pulling 10-year bond yields down 4 basis points to 1.69%, shrinking the spread over US Treasuries to 7 basis points. The dollar, on the other hand, is set to take its cue from the US Federal Reserve's policy statement and President Joe Biden's speech. That's as it seeks to extend a recovery from an 8-week low they touched on earlier in the week. The dollar index stood at 90.968. That was bouncing back from Monday's low of 90.679, its lowest level since March the 3rd this year. The US Central Bank is widely expected to maintain its policy settings, and Fed Chairman Jerome Powell is seen likely to repeat his dovish message. The euro traded at $1.2089 off Monday's 2-month high of 1.2117. The dollar-yen pair edged up in tandem with rises in US bond yields on the back of US inflation expectations. The yen was on the back foot also as Japan's economic recovery was hampered by recent surges in COVID-19 cases. That was after the Bank of Japan acknowledged that inflation will fail to reach its key 2% target through early 2023. Japan last week declared a third state of emergency for Tokyo, Osaka, and 2 other prefectures to contain the pandemic, clouding prospects for a fragile recovery and the yen's outlook. Besides the Fed, investors are looking to the US President Joe Biden's first address to a joint session of Congress. Biden is expected to roll out a plan to raise their taxes on the wealthiest Americans. That's including the largest ever increase in levies on investment gains to fund around $1 trillion in childcare. In crypto assets, Bitcoin extended its rebound from a tough hit on Sunday to $55,461. Ether hit a record high of 2,711.6 in Asia on Wednesday. Now let's take a look at the commodity market update. Crude oil prices inched higher on Tuesday as OPEC Plus progressed on their plans to increase the production from May. The cartel believes that India's COVID-19 crisis will not have long-lasting impact on crude oil demand. Brent crude oil futures for July traded at $65.94 per barrel, whereas WTI crude oil futures for June delivery traded at $63.01 per barrel. That was up 0.11%. The cartel decided to go ahead with their plan to slightly ease the production cut from the 1st of May 2021. India, the third largest crude oil importer and consumer, has reported more than 300,000 coronavirus cases for several consecutive days now. Copper prices surged to 10-year highs on Tuesday after robust demands and supply concerns from Chile, the world's largest copper producer. The scenario has disturbed the market equilibrium. The price rise was supported by the supply concerns. The Chilean port workers have called for a strike. However, there's no actual indication of supply disruption so far, but copper prices have rallied. The prices were also boosted by hopes of a rebound in economic activity and better than expected economic recovery data from the US and China. Additionally, Biden's $2.3 trillion infrastructure plan has also lifted the copper prices. Okay, that's all for now. Stay tuned with Kalkine TV for more live market updates. We'll be back with more news on the markets, the economy, and diverse themes and sectors. I'm Rachel Jones, signing off now for Kalkine TV.